Welcome to Medicare School Daily, where we help you understand Medicare, save money, avoid mistakes, and above all else, get the most out of your Medicare benefits. Today's topic is this question here: what is the best Medicare Supplemental Plan G? Many of you have already decided that you're going to get a Plan G, and so the question is, which one's the best? Well, I hate to be the bearer of bad news, but folks, there really is no best. Now, I'm not saying all insurance companies are the same. They're not for sure. But there is really no best, but there are some differences, and so that's what I'm going to teach you today. So the first question I want to address is this: what is the same, though, with all G plans? In other words, what is identical with the G plans? There's actually 4 items that are the same. Number 1 would be the coverage. You know that when you go in Original Medicare, there are 6 gaps in Original Medicare. In other words, these are things that Medicare doesn't pay. Medicare pays first, but they leave you with some gaps, some financial liabilities. There are 6 of them in Medicare, 3 on the A and 3 on the B. And so if you decide to take a G plan, 5 of those 6 gaps are covered. In other words, pays very, very well. The one gap you're responsible for is called the Part B deductible. Part B deductible. This year, that deductible is $198, and that is for the whole year. So that means you're responsible for the first $198 of anything covered by Medicare B. A couple doctor visits, maybe $198 of an MRI or something. But the point is, that's all you have to pay. So regardless of the carrier that you choose, that will be your only out-of-pocket expense on the G plan. So it would be dishonest of someone to say, you know, if you buy a G plan from ABC Insurance Company, they pay better than XYZ G plan. In other words, that company's G plan. That's not true. If someone were to say ABC doesn't pay near as good as XYZ, that's not true. Folks, the same bills, the same type of bills, and the same amount of bills are paid by all G plans. Why? Because Medicare standardizes the G plan. Medicare says this: when you buy a G plan, as long as Medicare pays first, that G plan will pick up everything for the whole year other than the first $198. Coverage is the same. Number 2, the network is also the same. Well, why is that? Well, because when you get a supplemental plan, there is no network with the plan. In fact, any provider that takes Medicare, you can go to that provider and they will take your supplemental plan, because that supplemental plan is nothing more than the secondary payer. Medicare pays first, you choose your supplemental plan, and they're going to follow, covering everything but the first $198. So the network is the same. Now listen, there are some plans called Advantage plans that do have networks. Those are HMOs and PPOs. But when you have a supplemental plan, there is no network whatsoever. So again, that's identical. Number 3, customer service. Now, what do I mean by this? This means that you've had some kind of an issue going on and you have to call into the carrier and you have to talk to them. You'll call the 800 number that's on the back of your card. And here's the way it's going to go. You call into a call center. You could get someone there that's very well trained, very good attitude, very helpful, and they do everything they can to take care of your customer service issue. And you'll hang up the phone. You'll say, that was good. And you could call back 10 minutes later, the same 800 number on your insurance card, and you could get someone that's not so well trained, that's not really having a very good day, not having a good attitude, and you would say, that was a lousy experience. And what I'm saying to you is that is the same. Depends on who picks up the phone, and all insurance companies have call centers. So your experience is only as good as the one who picked up the phone. And then lastly, claims experience. What I mean by this means there's been a problem with the claim. And typically when this happens, in fact, 99% of the time when it happens, what's happened is there's a bill that was filed with Medicare and Medicare denies the claim, therefore your supplemental plan denies it as well, and you get a bill for the full balance. Well, when that happens, more than likely, it's a coding problem. So when we have a claim problem, it's typically a coding problem. Somebody in the billing department, the doc's office, the hospital did not submit that claim with the right code. That's why Medicare didn't pay. And so that's easily correctable. We call the provider and say, that should have been covered. Can you see if it was billed correctly? They'll say 99% of the time, no, it wasn't. And they'll refile the claim, and Medicare pays, your supplemental plan will pay as well. So my point is, the claims experience, problems happen in billing departments, not with the carrier. So all these items here are the same regardless of what G plan that you go with. So that's what's the same. Now let's talk about the differences. And there's actually only 2 differences. Number 1, there will definitely be a difference of the initial premium, meaning when you start on that particular plan, they quote the initial premium. Now the initial premiums are always based upon age, gender, male or female, based upon tobacco status, right? Whether you are a tobacco user or not, and then where you live. So this would be location. Sometimes that's county, sometimes it's state, sometimes it's zip code, but all that determines your initial rate. And then sometimes when spouses are going on the same plan, that carrier will offer what we call a multi-policy discount. So those are the variables that determine what your initial premium is going to be: age, gender, tobacco status, where you live, and as a spouse going on the same policy. So that's initial premium. That's where we begin. But then second issue that will be different for sure, and that will be the stability of the premiums, which means what are these rates going to look like in 3 years, 5 years, 10 years down the road? Well, number one, no one knows for sure. We have no idea. But what we can do is we can track the stability of the companies, and for sure there's going to be differences. So what is it that would cause rates to increase? Number one, I want you to realize that all rates go up just because of medical inflation, but some companies are very modest in their increases, some a little bit more amounts, okay? Now keep in mind, whether you have a group plan at work or you've had an individual plan or even people that are on Medicare Advantage plans, everything goes up, folks, because of medical inflation. Co-pays, max out-of-pockets, all those things go up. So we are not shocked to see some increases in premiums, but what we want is stable premiums, modest increases. So let me show you how rates change with supplemental plans. So when you buy a supplemental plan, what's happening is, regardless of the carrier you go with, you're going to be placed into a block of business. This would be like a group. And so what's going on in this, and we say that we're in a G group, and let's say your initial premium is $110 a month, okay? $110 a month. Now, there's actually two ways that rates go up in most states, and that is when you're a year older, a year later, and at policy anniversary, you'll see your monthly rate go up slightly. On average, that's about $40 or $50 a year. So if you're paying monthly, we take the 40 or 50 per year divided by 12, and we're going to see that rate go up maybe $4 or so. And that rate increase is to cover some of the inflationary things that are happening with Medicare claims, all right? So that's one kind of increase. But the second increase is really what we're more concerned about, because this is no shock here. The second one is this. What's happening is this. You have the policy owners paying in their premium. That's you, paying into the group. All policyholders are. And then you have the company. What are they doing? Well, they're paying money out through claims. So what we have is we have money going in and we have money going out. So group increases happen whenever claims exceed premiums. So we have more money going out than money coming in. Now, when this happens, the only way they can ever raise the rate because of this group increase is they have to go over to the state insurance commissioner, and they have to petition for a rate increase to cover those groups. So the insurance commissioner must approve this particular increase. And so they petition for a rate increase. Insurance commissioner's office audits that. They have to approve it, and then they will approve it. And let's say it's a 3% increase. Everybody in the group is then going to go up 3%. All right, so what determines that? What determines that is the health of the group. Now, as we go into this group, we don't have any idea the health of the group. We don't know how much cancer is in there and how many knees and hips are going to be replaced and how many stent implants will occur and how many cataract surgery. We have no idea. What we can do is if we go into a company that is proven to us to be a larger group, which means more policyholders, which means the risk of that is spread out to more policyholders, then we will have less of these kinds of increases. And so companies that tend to have a smaller group, smaller block of business, we see these happening more often and more drastically. So that's what brings stability to rates. The larger the group, because it's really the health of the group that determines the group increases. All right? So I hope that helps you understanding how premiums increase. And so, folks, the bottom line is there really is no best company, but you are looking for a better company, a company that's stable in the rates and offers good initial premiums. To learn more, watch the related video or check out our most recent video. Also, be sure you click to subscribe for free and get notified every time we post a new video. To watch our complete Medicare workshop, go to MedicareSchool.com. And finally, when you're ready to compare all your insurance options and get free enrollment help from one of our Medicare School guides, call the number on the screen. See you next time.